I'm not sure it's the base case. I think we rally hard in Q4. I think the setup is absolutely incredible. You have Wall Street rallying around the debasement trade as the most popular trade of the year. I think people are going to pile into that so they can show their clients at the end of the year that yes, they saw this coming. They were in Bitcoin, they were in gold. So I think we're going to see strong flows there. I think you're seeing an acceleration of ETF flows. When we combine those two things, I think the price goes up substantially. We have deliberately not revised our forecast because we still think it is in play to get there. Whether we'll get all the way there or just directionally there, I'm not sure. I'd love to know Ryan's take, but I'm still optimistic that we'll end up north of 150 and maybe we'll get a run to 200K if everything lines up the way I think it might.
When Trump makes a dramatic or extreme claim, markets tend to overreact at first, only to stabilize later as the rhetoric cools down. This time, however, the tweet in question was exceptionally aggressive, invoking fears of a full-blown trade war and existential uncertainty in the global economy. Investors panicked, dumping stocks and risk assets in droves. But Hougan's takeaway is simple: the panic is overdone. He believes that while the market may wobble in the short term, Bitcoin and crypto remain insulated from this kind of geopolitical noise and might even serve as a hedge against it.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
For the last 9 months, we've learned that the right thing to do is to fade Trump's initial statement. He stakes out an extreme position and then historically has dialed it back. So my initial reaction to a move like this is that the market is probably overreacting. All that said, it's a really aggressive paragraph, right? It is talking about a fairly existential trade war. I'm not surprised people hit the panic button and sold everything off. I do not think, to go back to your intro, it interrupts October. I think as the market recalibrates, it will realize that Bitcoin is insulated from this and crypto is insulated from this, and maybe actually a hedge against this kind of craziness. But yeah, the market's going to freak out for a while. Everyone should take the time to read that tweet because it is a remarkable $1 trillion tweet and it is pretty aggressively worded. I'm not sure it's the base case. I think we rally hard in Q4. I think the setup is absolutely incredible. You have Wall Street rallying around the debasement trade as the most popular trade of the year. I think people are going to pile into that so they can show their clients at the end of the year that yes, they saw this coming. They were in Bitcoin, they were in gold. So I think we're going to see strong flows there. I think you're seeing an acceleration of ETF flows. When we combine those two things, I think the price goes up substantially. We have deliberately not revised our forecast because we still think it is in play to get there. Whether we'll get all the way there or just directionally there, I'm not sure. I'd love to know Ryan's take, but I'm still optimistic that we'll end up north of 150 and maybe we'll get a run to 200K if everything lines up the way I think it might. It's not just crypto yahoos like Ryan and I that are saying we could see a melt up in Q4. JP Morgan is talking about 165K by the end of the year. Standard Chartered, you know, a stuffy UK bank, is talking about 200K by the end of the year. People are doing that because they're looking at the imbalance between supply and demand and crunching the numbers, and that's what they're finding. But try to find me a stock that a major bank thinks is going to double in the next 3 months. Analysts don't put out those sorts of recommendations. The fact that they're doing it in Bitcoin suggests to me that it's not just Ryan and I being Bitcoin bulls. It's actually sort of a reading of the fundamentals that this is still something that could easily happen in this market. I think we're on that track. It would help if we got a little bit more aggressive on the rate cut outlook, if it looked like the Fed was going to be more radical about letting the economy run hot while cutting rates. I think we could get that sort of signaling. It would help if we see more sovereign wealth funds allocate. But I think that debasement trade and the unlock of platforms like Morgan Stanley and Wells Fargo to buy Bitcoin and how that correlates to flows, I think that alone might be enough. But I do think if we start to see the the Stephen Moran force driving down expectations for interest rates, I think that would be an extra catalyst, a cherry on top. There's a relentless bid for investment into everything related to stablecoins and tokenization. Ryan and I have both been on the road recently. I've been in Chicago and New York this week. Next week, I'll be in London and Barcelona. Every TradFi investor that's looking at crypto, as interested as they are in Bitcoin, what they really want is a way to hop on the stablecoin and tokenization train. The primary ways they're doing that, there are three. One is ETH, the other is Solana, and the third is crypto equities. We're seeing a lot of inflows into our crypto equity ETP, but that train is leaving the station. I think the question there is whether the Clarity Act goes awry and doesn't make passage through Congress. If we do see sort of momentum on the Clarity Act reappear and rising expectations that it will get through Congress, I think that trade's going to absolutely explode, and we'll see much higher ETH and Solana prices and huge inflows into those ETPs. So that's the other big story in crypto, and it's just relentless and overwhelming from the TradFi side. So just think about how sad you will be if stablecoins dominate global payments and every stock and bond is tokenized, and you called it before 99.9% of the world, and then you bet on the wrong horse and ended up with nothing. It would just be a psychologically crushing position to do. Look, the scale of the market that stablecoins and tokenization is going after is so massive that even if you bought like the top 10 potential winners and only one of them won, which is not what I think there'll be multiple winners, but even in that scenario, you're going to do extraordinarily well. So I agree, we can all have our favorite child, but many people would do well to bet across them. I just think the risk of picking the wrong horse in this race is too large given the size of the prize at the end of the race. Yeah, I should first tell my ETH friends that I also am very optimistic on ETH. I think it's well positioned. It's the leader in stablecoin and tokenization AUM. But in 8 years of operating full-time in crypto, I've never quite seen a setup like the setup for Solana. The three things that I think are going to lift it substantially higher are you have this massive unrelenting interest in stablecoins and tokenization, and Solana has one of the best and most interesting solutions there. You have the rise of Solana digital asset treasuries with charismatic and well-spoken leaders like Kyle Samani, who will be on CNBC talking about Solana ad infinitum. And then you have the expectation that we're going to see a lot of ETFs launch. When we've had these things line up before, you had Bitcoin ETFs, Bitcoin DATs, and rising interest in fiat hedges, and the price tripled. You had Ethereum ETFs, Ethereum DATs, and rising interest in stable coins, and we're from 1,500 to 4,000 plus. And then you think about the fact that Solana is a tiny asset. It's 1/5 the size of ETH. It's 1/25 the size of Bitcoin. Just a little bit of flows into it because of those things I called out. There could be a real supply demand crunch there. And I think the price could double or triple in relatively short order as institutions make their first allocations into this space. Again, I've never seen a setup quite look like this.
Hougan now gives the bill roughly a 55% chance of passing. But if it stalls, it could cast a shadow over all crypto assets except Bitcoin and Ethereum, which already enjoy some regulatory clarity. Everything else could face headwinds. He also emphasizes that ETPs, exchange-traded products, don't create flows, they amplify them. Meaning ETFs won't spark demand out of nowhere, they act like a superhighway when excitement is already building.
The risk is I was 90% confident we were going to get it, and now I may be flirting with below 50 or around 50. The two reasons for that, you mentioned one, which is the government shutdown. They literally can't work on this because the doors are closed, because the government's incompetent. And the second reason is we've seen the Democratic counterproposal in the Senate to the Republican bill in the Senate. And the Senate is where all the action is right now on the Clarity Act. And the Democratic proposal is a non-starter. It's aggressively anti-crypto. It feels like it was penned almost by Elizabeth Warren. And so there's not an easy path to reconcile the Republican version with the Democratic version. They're on two very opposite sides, and it looks a bit like the Democrats want to make this a difficult political issue. If it doesn't happen this year and we bleed into next year, it probably gets even harder. The way it's resolved, I think, is you're going to need lobbying pressure from crypto and lobbying pressure from the traditional finance industry to encourage those Democrats to move along. I'm probably still at like a 55% chance it gets through, but I do think it's a real risk to the market. If we see the Democrats digging their heels with their current approach, you could see expectations sour for this, and that would be bad for everything except for maybe Bitcoin and Ethereum. Everything beyond that, I think, would suffer from a regulatory perspective. I think the right way to think about ETPs is not that they bring flows, it's that they amplify flows. So in retrospect, looking back at the Ethereum launch, why did they not bring flows into ETH? Well, literally no one wanted to buy ETH between July and whatever, maybe for about a year, right? For the first year that they were in the market until maybe April 15th or May 1st of this year. That's when ETH got its momentum back. We had reorgs at Treasury, we had new technical advances, and we had the stablecoin trade. So what that tells you is they don't bring flows on their own. You can't launch a Bitcoin Cash ETF and suddenly we're all talking about eCash again, right? That's not going to happen. But if a asset has a good story and a good reason for flows, then the ETFs are like a super highway that let traditional investors pile in alongside retail investors. So I think it's going to be pick and choose them, right? Do I think Solana will get flows? I absolutely think Solana will get flows. Do I think Chainlink will get flows? I think Ryan is right, but early. I think the narrative will roll onto Chainlink after people digest Ethereum and Solana. Would Hype get flows? I think Hype would get flows. Will Litecoin ETPs get flows? Boy, I would be surprised. So think of them as a flow amplifier and not a way of inciting flows. That's the right way to think of these ETPs. So there'll be winners and losers. But it's good to have them because it does make the flows flow faster when people are excited about an asset. One thing that occurred to me, which maybe should influence his Bitwise product strategy, that's why I do these calls with Ryan, is the way they can incentivize flows if they make it easier. So as an example, right now, everyone wants to invest in stablecoins and tokenization. It's a hop to get to Ethereum and Solana, which TradFi will pronounce Solana or whatever. But if you have a stablecoin and tokenization ETP, or you have a thematic ETP, then it becomes easy. I want to invest in stablecoins. I Google stablecoin in Charles Schwab and up peps this. I do think that can incentivize flows. So maybe the index thematic strategies will drive flows in a way that the individual crypto assets will not. It doesn't matter how many people dislike an asset. So if you take the median opinion of XRP in the crypto community, it's probably negative. That does not matter for flows. The only thing that matters is, are there people that really like the asset? Because the people who dislike it just don't buy it. But if there are people who like it, that's better than having a sort of meh reaction, like an asset that everyone's like, oh, the umpteenth layer one, meh. I'd rather have people who love an asset and hate an asset. That's actually good for flows. So XRP is an example where, of course, there'll be flows because there is the XRP 10,000 people and they're all going to want to buy. That may be, I think, misunderstood by the market a little. We think Bitcoin ETFs will set a record for flows in Q4 and that total 2025 flows will be above 2024 flows. They haven't been on pace for that until October, but we've seen flows significantly accelerate. And I think we'll end up with 35 or $40 billion. My bigger, hotter take on Bitcoin ETFs is I think eventually that'll be $1 trillion market. So right now it's about 200 billion. I think we're going to wake up in a couple years and there'll be $1 trillion in Bitcoin ETFs. Part of that is that I think the price of Bitcoin will go up. And then part of it is institutions still by and large don't own that much, right? It's still 75% owned by retail. I think it'll be 75% owned by institutional. So inflows, price appreciation, we'll have $1 trillion in Bitcoin ETFs within a few years. And I think that'll be exciting. For a long time at Bitwise, our average client allocated after 8 meetings with us, which was painful from a business perspective, but should be helpful from a flow expectation. If they've been doing quarterly meetings with us since the Bitcoin ETF launched, they're just now curing to the point where people may want to allocate. And I think people probably don't understand that. TradFi moves at a much slower rate than crypto investors, but we're just, I think, at that inflection point where we're actually going to see flows accelerate a lot.
Hougan believes that Bitcoin ETFs are on track to set record-breaking inflows in Q4, potentially ending the year with $35 to $40 billion in total assets. And in the next few years, he predicts a $1 trillion Bitcoin ETF market. That's not just because Bitcoin's price will rise, but because institutional ownership will flip. Today, roughly 75% of Bitcoin is retail-owned. Within a few years, Hougan expects that ratio to reverse: 75% institutional, 25% retail.